Hey everyone, this is Red again with RedDragonLeo.com. On this video I'm going to go over the chart pattern trader. He's probably one of my favorites. There's a lot of good chartists out there that I like to review, see their different counts, see if I can't piece it together myself in my own head. But let's start off with his charts. We're now looking at the weekly chart here. And as I said last week, I still expect us to go down and touch this line right here, which is probably now, I guess it's still around 990, somewhere in that range. As you can see by this candle right here that we just put in, we now have two consecutive candles, two closes I should say, below the red 40-week moving average. The 40-week moving average is also the 200-day moving average on the daily chart. This is the first time this has happened since the March low of 2009. You can see we still have a lower histogram tower. I know we're close to turning back up and moving up and doing a substantial rally. What I would have liked to have seen is a lower histogram bar here showing that we're turning back up. So maybe possibly this week put in a lower low and then close back up at the top and put in a bullish candle, you know, up at the top. They call that a hammer, bullish hammer. That would be ideal. Don't know if that's going to happen. That would be ideal, showing that it's going to reverse, and then a lower histogram tower bar there. As you can see, we are still in bear territory, as there's no sign of it crossing back up yet here on this MACD. Now down here on the stochastics, it's showing that it wants to hook back up, but that just tells me there's plenty of room left for the bear case to put in another low for this week. Now, when these lines cross, by the way, this blue 20 period moving average and the 40, when they cross, which may be another month or two, I don't know. May trade sideways for a few months. But when they cross, they call that the kiss of death. You'll see lots of fund managers start to unload and sell hard. That will probably be when our primary wave 3 starts down. I'm just guessing at that, but it just makes sense. Same thing here. You can see here on the RSI, on the weekly, we are sitting clearly below the 50. It's wanting to hook back up, but not yet. It's just kind of flat. It's the actual reading there is 44.96. So that's still in bear territory on the weeklies. Now let's look at the daily charts. On the dailies, we're looking like we've got a hook right here, like we're wanting to turn back up. The same thing happened right here. So if you draw a line from this lower histogram tower bar up to this one that's a little bit higher, this is called a positive divergence. It's where the price actually goes lower on the second one, on the second lower tower, but it's not as deep. It has a higher low on the histogram towers. Now, in my opinion only, I think this thing needs a third histogram tower that is a higher low in order for it to successfully move back up again. This was just very, very strong, this down move here, much stronger than this one over here that only had wave 1 down, 2 and 3, just basically an ABC move. It tried there, failed, and then finally hooked back up there. So you can see it put in positive divergence on the daily chart here as you connect these, and it worked with just two histogram tower bars. This one here is much different because of how much further it dropped. From about 1220 down to 1040 is 180 points. That's a lot different than the 1150 down to 1040 that you had over here, which was 110 points. Plus, this is clearly in a 5-wave pattern already. If you count, this is 1, 2, 3, 4, 5. It's already in 5 waves. I don't know, I'm not an Elliott wave person, but could we have a sixth wave going down here? Or I don't know. Maybe they just don't count this one here as a wave, and they just call this entire thing a wave 1. Then a wave 2, a wave 3, a wave 4, and then a final wave 5. But I really feel like it needs to have a third lower histogram tower bar, which would mean a lower low coming back down here. Looking up here, you can see we're still in bear territory. Even with these rallies up, we are still clearly below the 50, which is still bear territory. The only thing that's positive right here is the ADX line seems to be overheated, and the negative DI line did cross it. Doesn't mean it can't cross right back up, but it did cross it, showing that that it's weakening. So there's not much left on the downside is what it's basically kind of saying there on the dailies. So the daily right now is wanting to hook up, wanting to support the 60 and 15-minute charts, which are smaller charts, smaller time frames. The daily's obviously got more power on it, so it's wanting to push it up, and that's what it's attempting to do right here. So when we look at the 60, we can see on the 60 right now that it is pretty much ran out of juice. It's ran out of power and is getting ready to cross back down here below and put in a lower histogram tower bar here. Now the question will be, will the daily support it enough so that this can go down, recycle, and reset itself back up and push up? Will the daily hold the actual price up so that it'll kind of just trade a little sideways, maybe put in a bull flag, and before it actually rolls back down? I don't know the answer to that. Maybe, maybe not. Maybe the daily's wanting to hook back up, but it hasn't fully hooked yet. So that's the question. You can see that it is on the stochastics. It's going down. It's not below 50 yet, so it's still bullish. It's above 50. But if you look at this, what I find is if you compare this move right here, a large move up, down slightly, up again, down slightly, up again, down slightly. And you look over here at this, and you got a large move up, down slightly, up again, down slightly, up again, and then look at where the cross is right there, and then look at the large histogram tower bar. They look very, very similar. Now I'm not going to say that it's going to be exactly the same thing. It's going to do exactly what this did, because clearly at this point the daily wasn't hooking back up yet, but it was trying. If you look here, it was actually trying to hook back up at that same point. So it's kind of very similar to this right here in that aspect, except now we're deeper. Okay, so those are some things to keep in mind. Everyone is expecting this to go up here to at least this channel line, 1120, and I'm not going to say that it won't. Possibly it will. But that's what most people are expecting that are looking at this in the channel. When you look at it like this up here, you can clearly see that there's indecision here as the positive and negative DI lines are crossing, and that the ADX line is losing strength. Now when this curls back up, one of these lines is going to be on top. Will it be the green one, and if it's the positive one, and put a lot of strength into the bulls and rally this thing up, or will it be the negative one? I don't know to answer that question. Looking at the 15 here, you can see that what we have here is an inverse head and shoulders. If you measure this pattern down from this 1040 to about 1090, you got 50 points. You add that on to here, you got about 1140. That's what most people were expecting for this to pop up to. So they're expecting this to be a head, a right shoulder here possibly, or another right shoulder here. And based upon the time, this one here was probably the right shoulder that they were matches up with this one. This is the left one, and maybe we get another little one, but see, it really kind of failed there. So everyone, I believe, is expected to move up to 1140 here if this pattern plays out. 15's not really giving us any clues. It's looking like it's going to go down, but it could hook back up. Did a little bit of selling there until the close because nobody wanted to hold over the weekend. But so from this, we got some indecisions. So in the next video, we're going to go over some of the other charts, and we shall make our decision from there.